Now we come to the part of the show where I talk about three things that I think are important for individual investors to consider before they make their investment decisions. As you can see here, number one, after a big run in the markets, you got to stick to your discipline. And we saw a big run after the election. Markets really rallied, and a lot of individual investors, sorry, there's a train going by outside. A lot of individual investors, they decided to hop on that momentum. Some didn't. We're going to talk about what you should do when there is a big surge in the market. Stick to your discipline is what I always say. We'll touch on that. Nvidia earnings. Nvidia earnings. They report earnings on November the 20th. Nvidia is now the largest company in the world by market cap once again. Why is Nvidia so important? We're going to talk about that. And November 20th, big day for the markets, big market mover. And the third point I wanted to touch on, American economic indicators to watch. We're going to get a bunch of US data coming out. And already some of it has come out this morning. CPI, Consumer Price Index, inflation numbers coming out and telling us or showing us what the inflation picture looks like in the US. So again, another few data points that I think investors should be looking at before you make your investment decisions. So let's talk about the first point. Another big run for the markets. I say stick to your discipline. Some would say no. You want to go in there full throttle, try and make as much money as you can. Try and get in and then perhaps get out by the end of the day, perhaps get out the next day. Some people try and time these types of markets. I always say stick to your discipline. And the recommendations I made to individual investors while we saw that big surge last week was if you are going to be a buyer, you want to be a buyer for the right reasons. If an investment represents good value, makes sense, has a good story behind it, and all the data behind the name, the fundamentals. If it makes sense, then yeah, sure you could buy. But just because there's a lot of hype going on in the markets, I don't think you just want to just plow into the market and throw caution to the wind. Our first chart actually shows the S&P 500 and how much it gained. As you can see right here, we had the election on the 5th and how well the markets did shortly thereafter. An unbelievable gain in the markets. I think the Dow was up something like 1,500 points. That next day, the S&P was up, TSX was up, the NASDAQ was up. Every market in North America, every major index in North America was higher. But again, I think you need to stick to your discipline. I think you need to stay diversified. You don't really want to just jump into anything. Our next chart shows here sector performance. And when you look at all the different sectors on the S&P 500, largest index in North America, 500 companies, you can see here year-to-date numbers, which is your middle column, how well all the different indices have done. An opportunity for those looking to build nice diversified portfolios, well, you can, because you're getting gains or experiencing gains in many different areas of the market. Now, one of the reasons why I say, if you just jump in with both feet into the water when you see the markets moving significantly higher and you have that fear of missing out on these gains, and I say, no, you shouldn't do that. You want to stick to your discipline. I think the next chart really shows this. And we have a chart of JP Morgan Chase, the largest bank in the United States and one of the largest banks in the world today. On that next day that the market opened up and when we found out that former President Trump will be the next president of the United States, names like JP Morgan and other major banks moved significantly higher. Well, what happened the next day, the second day after? You see a pullback in JP Morgan stock. Now, I will say a lot of the gains or most of the gains have been held, meaning JP Morgan stock did not give back all the gains. And in fact, before we came on the air this afternoon, JP Morgan actually was higher again today. But you can clearly see that if you don't stick to your discipline, if you just go with the flow and buy just on a whim, if you will, or just because that's what everybody else is doing, that's what the herd is doing, you can see that if you would have gotten into this stock, let's say late in the day on the 6th, for example, well, you may have experienced a small bit of gains, but then that next day you would have lost those gains and probably been in the red for that trade, at least initially, at least temporarily. So it is very difficult to just buy because everybody is buying. I think when markets are moving as they did last week, right after the election, you want to stick to your discipline. Buy if it makes sense. It makes sense from a valuation perspective. If it makes sense from a technical perspective, fundamentals are working. That's why you make a buy. You don't just buy because everybody else is buying. So one thing I want to say, and I guess one of the points before you make your investment decisions over the next couple of weeks, stick to your discipline. The markets are high right now. Things are moving in the right direction for the most part, which is great, but you want to stick to your discipline. Second point I wanted to touch on are Nvidia earnings. And everyone knows Nvidia, it's been the hottest stock on the planet. Taylor Swift, the hottest star on the planet. Well, Nvidia, been the hottest stock on the planet for the last couple of years now. And it really has become, and we can pull up a chart on Nvidia here. It's done so well. You can see here how well it's done. We've had a few minor pullbacks along the way, but we're at pretty much all-time highs right now. And being at all-time highs, if we pull up our next chart, which shows market capitalization for the biggest companies in the world today, and if you pull that up here, you can see that Nvidia has now become the largest company in the world, largest chip maker, largest tech company, but largest company in general, surpassing Apple and Microsoft, the other two $3 trillion companies that exist today. And Alphabet, over 2 trillion, Amazon, 2 trillion, Meta and Taiwan Semi, a global chip maker, over 1 trillion. And again, most recently, with the recent surge after the election, Tesla shares have now gone up significantly, and Tesla is back to being over $1 trillion. And you can see there, Berkshire Hathaway, Warren Buffett's company, is just about to reach the $1 trillion mark. But Nvidia is so important because of its size, because how much it means to the market, to the index. We have another chart here. It is the iShares Semiconductor ETF. And this ETF in particular, we call it the SOX ETF. There it is. You can see this is a very important index because chips represent so much of the tech market. Tech represents almost 50% of the S&P 500. So one could actually say, as chips go the tech sector, which goes the S&P 500, and we know Nvidia makes up almost 10% of the SOX index itself. So as goes Nvidia, goes the market. Well, I don't think it's a stretch to say that. So Nvidia earnings that will be coming out on the 20th of November will be a very important number for the markets. And they usually report, and I believe they do report after the bell. And the last couple of charts I have on Nvidia, we can see operating revenue. And you can see operating revenue has actually started to come down a little bit with Nvidia. There it is, but still doing tremendously well. And our last chart here, profit margin. Profit margins continue to be quite good at Nvidia. Many people, including myself, believe that over time, as we get more competition in the AI space, profit margins will start to pull back from, let's say, that mid 70% range to somewhere maybe in the 60s and even 50s, as names like AMD and other chip makers challenge Nvidia for their dominance. The third point or idea that I want individual investors to keep their eye on is all the economic, US, I should say, economic data that will be coming out and has already come out. As I mentioned earlier on our show, just off the top here of this segment, CPI, Consumer Price Index in the United States, came out this morning. And I think the biggest thing, and we have a chart on US CPI, you can see here the biggest change, or the only change, is that the headline number has gone from 2.4%, actually higher, to 2.6%. Core CPI, or core inflation, which strips out volatile energy and groceries or food, is remained the same at 3.3%. So CPI is important because that will give an indication to investors and the Federal Reserve as to what inflation is doing and how they should react at the next Fed meeting. We're going to see the Fed and the Bank of Canada have one more meeting in December before the end of this year, where they will set policy, and it is anticipated that the Fed will cut a quarter point. It is anticipated that perhaps the Bank of Canada may cut another 50 basis points, but we will have to see. So keep an eye on today's market and the next few days based on the inflation data. Next chart we have is on the US dollar. And you can see how strong the US dollar has been against a basket of major currencies around the world. You can see US dollar actually at multi-month highs versus major currencies around the world. Our next chart here shows US dollar versus Canadian dollar, and it shows roughly a 72-cent dollar. That actually is a little bit behind. It's now less than 72 cents in that 71.5-cent range and falling. And it is falling because right now it is anticipated the Bank of Canada will continue to lower interest rates faster than the US will. Economy in Canada is not doing as well as in the US. We don't have all the tech and AI that they have in the US, more commodities based, energy or base metals. And that's just not doing as well over the last little while as tech. And I think that has a lot to do with what's happening with the Bank of Canada, their actions, and obviously the effects on the dollar. Another point to consider, again, before you make your investment decisions, is this idea of where interest rates are in the United States. And again, we always look to the US because what happens in the US affects our markets a lot more than what happens here in Canada. We have our US 10-year Treasury. You can see how much the US 10-year Treasury has gone up recently. Not a good sign for the markets. Markets start to get a little jittery when that 10-year started to approach 4.25, 4.30, and now over 4.4% on the 10-year. We also have the 2-year. It's almost an identical chart. The 2-year is now up above 4.3%. At one point, it was actually inverted with the 10-year, but now it's come back, and the 2-year is now under the 10-year rate. But 4.34% is definitely a lot higher than it was just a short time ago. So once again, I think from an economic perspective, from a data-dependent perspective, I think you want to look at those three things. You want to look at inflation, you want to look at a dollar, the US dollar in particular, and its strength. Its strength will have an impact on Canada, Canadian imports, Canadian exports. It'll have an impact on Canadian business. US is our largest trading partner. And lastly, you want to look at US interest rates, where the rates are in the US. You also want to look at Canadian interest rates, but for the markets, from the market standpoint, US interest rates affect stock market movements a lot more. So those economic data combined with Nvidia earnings and looking or keeping your discipline when making investment decisions, those are the three things that I think you all should be watching before you make your investment decisions over the next few weeks.